Good morning, everybody, and welcome back to another live stream. How's everybody doing? Hope you're all doing well. Can you guys hear me fine? Everything's good? Type 1 if it's good. Type 2 if there's issues, or just let me know what the issue is. Sound is a little bit low. Okay, turn that up. How's that? Is that better? Yeah, sounds good. All right, perfect. Yeah, so for some reason my Streamlabs chat is not working, so I'm gonna have to figure out how to do this with just the YouTube chat. Pop out chat. Okay, perfect. Got it. All right. So good morning, everybody, and welcome back to another YouTube stream. So today, going into the market, not expecting too much because there's no news today. And also tomorrow is CPI, so we could potentially see some choppy price action. However, this week's outlook, my expectations were to see some chop on Monday, which we ended up getting a seek and destroy profile, which was perfect. And so today, what I would like to see is a SMT with previous day high, confirm that on the lower time frame, and look for a classic expansion week. So I'd like to see Tuesday kind of form the high of the week if possible. If it confirms within this SMT, then I'll look for shorts. And CPI typically does a continuation of the weekly move, which is why I'm looking for a classic expansion week. I've seen historically where CPI just chops around and wicks both sides, and usually that occurs if your Tuesday or the start of the week is not super clear yet. And so today, that's exactly what we're going to be looking for. Is for me personally, I'm going to look for this previous day high SMT to hold, and preferably on the lower time frame, I want to see London high also hold this SMT, and that way we could look for some lower prices. We have a volatility injection in around 11 minutes, which is going to be our equities open, and so that is mainly what I'm going to be waiting for. I want to see how the hourly trades at the time of volatility injection, and then we'll gauge it from there. Because here with previous day high on YM, we also have relative equal highs. Overall, on the upside, we have lots of equal highs. On a larger scale, the reason why I'm still bearish is because we are within a daily fair value gap here, creating an SMT with previous day high, right? So we have a higher time frame key level, a lower time frame SMT. Now all we need is an even lower time frame SMT. So on the 15-minute, right now we have a London high SMT, for example. I'd be looking for a market maker sell model into the external range liquidity and a continuation of the higher time frame overall if this continues to hold. So now we just have to be a little patient, wait a little bit for that volatility injection to tell us what price is trying to do, and once that occurs, we should be clear to look for some opportunities today. Any questions, or type 1 if that's clear, type 2 if you guys have anything I need to clarify. Okay, perfect. Is the music at a good volume for you guys? It's just meant to be in the background, nothing overly loud. Okay. If you don't hear it, that's perfect. You can play your own music. That's the intention, is like it's there just like to be, you know, the white noise in the background. So far so good for Forex and everything. Not much to really pay attention to as of right now, in my opinion. Everything looks pretty good. Is SMT on the low of crypto is giving us, I think it's gonna be, actually I have to do my analysis on this, but I would like to see 73k still, or 74k overall. Just a quick little sweep and then go lower, but every time we've been going for it, we've kind of just been, you know, falling short of that. Oil's still looking good, expecting lower prices. Metals, a little choppy, not really exactly as I expected. I would like a run lower on metals. However, it's kind of just chopping around here. That is my lecture slide. And CFDs, you know. Is it important to look at YM for SMT? Because then, because there are so many SMTs with YM, I think SMT between NQ and ES is important. So for me personally, I like to use SMT between ES, NQ, and YM. However, I do agree that if you have SMT between ES and NQ, it is higher probability. So I can see that our London high SMT is being invalidated here, and that's why we have to be patient, right? So if this is invalidated, then I would just wait for the hourly chart to confirm itself and give us some sort of change in state delivery, and then I'll start gauging an idea again. But if this London high SMT is unable to hold, then that would be the play. Just waiting for the hourly chart. Once again, we have volatility injection in 5 minutes, but typically whenever you see SMT form, this isn't really the formation you want to see, because it should be quite obvious whenever a cracking correlation is occurring. I would prefer YM to be down more into maybe 50% of the range, or at least 75% into the range, but hitting London high altogether while the other two are also hitting London high is just not a great sign of cracking correlation. And a great reference for what I mean is that you can see how ES and NQ are clearly trading into previous day high, and YM is clearly failing to trade into previous day high as of right now, right? What about SMT between EU, GU, and DXY? Which one of these do you prefer? I look at all three. Just like ES and QYM, I look at all three of EU, GU, DXY. Also, thank you everybody for 20,000 subscribers. I know I haven't been super active in posting YouTube videos, but I'm still actively gaining subscribers every month, so truly appreciate you all. Is SMT a must for your model to trade? Yes. If there's no SMT, then there's no trade for myself. So something you guys can start taking a look at is also 928. I don't know if there's something about that, but usually 928, you see some volatility coming in. So once again, just a little bit of patience here. Well, I want to see how this hourly candle closes. We still have 1 minute until volatility injection, and then we have 30 minutes until the hourly candle closure. So that's where patience comes in, right? And so this is exactly why you don't want to just blindly short whenever you see a pattern occur in the market. You want to see what the price wants to do near those levels. And so if we were truly bearish here, I would have expected YM to not even trade into London high. I would have expected to see some bearish order flow being put in once that SMT was created. Why is it important for 1 hour candle closure? The reason I want to see how this 1 hour closes because I want to see if we're able to trade direct right back into the range or not. So you see how YM traded above, rejected. I want to see how this hourly candle closes and if we can get a change in state delivery on the highs. And that would put us into a market maker sell model. And if that's the case, then that's why I'll look for some short opportunities. Something that I wanted to bring your attention to, everyone, is these new week opening gaps right here. That's another reason why I wanted to wait for this hourly candle, is because I want to see if we're able to drive up into this new week opening gap. Same as on ES, we have new week opening gaps here. I want to see if we can get some sort of resistance from these levels and then frame our trade from that. The major thing that I would be paying attention to right now is that we're above true week open, creating an SMT with previous day high. And so I want to see if we can get some lower prices from this 9 o'clock candle, since that is the only volatility injection of the day. So my model is quite simple. It's just a higher time frame key level, and then I want to see a intermediate term time frame SMT. I want to see a lower time frame SMT, and that's my model. It's a bonus if there's market maker models that are in alignment. So once again, this daily gap, I want to pay attention to what we're doing within it. Our previous day high is what created it, right? And we're getting SMT right now. And that's why I want to pay attention. You also have the new week opening gaps here on ES here, right? And I want to see how we react to these levels. I'll turn off the new day opening gaps. On YM, there's no gap at all, other than these ones on the lows, and then further down, or this one all the way up here. Does 930 volatility injection happen every day? Yes, it does, because you have your equities open, right? So if you're looking at the index futures or the US index futures, then it's whenever you have, you know, the stock exchange open, right? New York Stock Exchange open. Is that Christian lo-fi music? Yes, it is. It looks like a very nice market maker sell model into these lows over here, which is London low. What if there's London low SMT but no higher time frame SMT at low? Then I'm only paying attention to the higher time frame SMT. If I have a higher time frame SMT being opposed by lower time frame SMT, I usually anticipate either retracement or choppy price action. What if the rejection is in the form of a green candle with a wick close? That's fine, as long as there's a rejection of some sort. Do you look at the weekly time frame when determining a bias? So I'll always do my top-down analysis, usually starting from the weekly chart. I rarely go to the monthly chart, but I will be aware of it. I usually start from the weekly chart though. So right now, what is our weekly chart doing? What is our daily chart doing? And I'll find my key levels from the weekly and daily chart. From there, I look at my liquidity pools. So if we have a key level, for example, this daily fair value gap. Why is this a key level? Is because we have previous day high forming that daily fair value gap. If that's the case, if we have SMT with that previous day high, then now I know we have a higher time frame key level. We have an SMT within a higher time frame key level. And I'm looking for lower prices, right? So that's just an example of how I like to use the higher time frames. Yeah, I'm still waiting for the higher time frame to close. I want to see how this hourly closes here. So one thing I'm keeping my eye on right now for why specifically is that it left these equal lows right here. This is most likely going to be drawn back into, right? Because how many times have you been in a trade, price goes right before you're drawing liquidity, creates equal lows, creates retracement, right? And then afterwards plummets through those lows. Yeah, it looks like a very clean market maker sell model, but once again, I want to make sure my higher time frame context is in alignment before I go to the lower time frame. So it could very well play out without me, and I'm fine with that, but I need context to make my trade higher probability before I look for a trade here. Are these the only three markets you're looking at all the time, or there are some charts that help you determine long-term direction for these three index futures? So how I like to look at intermarket correlations is I like to use interest rates, forex, and index futures. And the reason is because they all affect one another. The interest rates will affect the dollar, and the dollar will affect the index futures. And so that's why I keep an eye on all three. But majority of the time, I'm just looking at index futures. So is anyone feeling eager right now to press a button? And type 1 if you are, type 2 if you're not. Love the honesty. So now you have to ask yourself, do you think that price is extremely obvious to you right now? Is this a part of your model? Right? And if it's not, then it's okay to miss the move. If you miss the move, just start, reflecting on price, why you missed the move, and compare it to your model. Then you'll start beginning refining your model. And oftentimes, a lot of people will try to learn more and more and more, when in reality, you just need a couple things to get started. You refine those things and they branch out into those things that you're trying to learn outside of your model. And it'll make a lot more sense when you get to that point. And so that's where discipline comes in. That's where patience comes in. Trust in your model, trust in your edge, right? If your model's not there, press a button. The only reason you feel eager is because you're expecting something to happen in the market. Quite literally, the only thing you have control over in the markets is yourself. Everything else is uncertain. Everything else is probabilities. And so you have to accept that. If you are feeling eager, be sure to journal that down right now in a physical journal, in your digital journal, whatever it is. Journal down how you're feeling right now. And later in the day, when you review your journal, you can then ask yourself with a new perspective when you're out of the markets, why did you feel that way? How can you improve upon those emotions? How can you regulate those emotions better? What should you do when you feel a certain way? Right? It's collecting data not only on your model, but it's extremely important, if not more important, to collect data on yourself. And only you can do that. No one else can do that for you. So that's why journaling in the moment when you're watching price is extremely important, if not at the more important than journaling what price is doing. Can you please tell me which prop firm is giving maximum leverage? I'm not 100% sure what you mean by that question, but I guess scalability wise, I would say Apex is most scalable, but it's also one of the hardest firms to, you know, use in my opinion because of the trailing drawdown. According to protraction profile, we did not manipulate during London and manipulating now. That's what I see. I'm not sure what you mean by protraction profile, but I would say that I agree. There could be manipulation right now at 9:30, right? The Judas swing. What I'm waiting for right now is this hourly candle to close to give me more information on how we're reacting to the new week opening gaps, how we're reacting to this daily fair value gap we're in right now, how we're going to be reacting to the previous day high, what kind of PD rate are we going to form within this 1 hour candle, right, etc. And that's why I'm waiting for the higher time frame to tell me what's going on. And I know your risk management while in top step evaluation. I risk 0.33% per trade on my funded accounts, and usually on my top step evaluations, I have worse risk management for sure. But for me, evaluations are more so if I have a trade, I'm going to put more risk on it so I can pass the eval or fail it quicker. And that's just how I approach evaluations because, you know, I'm in the position where I have the privilege to afford losing evaluation accounts, right? And so because I'm in that position, I would just, you know, not full port, but risk significant more, like maybe 1% per trade, maybe 1.5% per trade. Whereas if it is a newer trader and you can't necessarily afford to lose your evaluation account, then I would suggest just risking whatever you plan to risk on your funded account so you can get that extra practice in. Best prop firm with less money? I would say, I think the cheapest firm, if I remember correctly, is my funded futures. And the reason they're the cheapest is because they don't have activation fees. So with Top Step, if you get a 50K account, it's $50. And let's say you pass it within the first month. Well, the activation fee is, I believe it was $150. With Apex, it's $85, right? So if you add those costs up, it adds up to being more than paying a little more initially for my funded futures. Now, the risk there is that you're going to be taking the risk with my funded futures up front if you fail the challenge. Whereas with Apex and Top Step, you will have a cheaper fee technically if you failed the challenge. So it really comes down to where are you at in your journey? Are you confident in passing your evaluations? If you're confident, then go with my funded futures. If you're still learning, still on the edge of becoming profitable, break even, maybe sometimes blowing accounts, then I would suggest Top Step. The reason I rarely suggest Apex Trader to newer traders is because of the trailing drawdown, and that will severely mess with your mental capacity because it trails your stop or trails your maximum loss based on equity rather than balance. That means whatever your unrealized profit is, your max drawdown is trailing with that. what is so important about the NWOG? So what I think is so important about the NWOG is that it's a time-based PD array. And so I'm very big on time-based levels. And so the new week opening gap is a time-based PD array, right? It's a time-based inefficiency. And so that's why I personally think it's of importance. Same as the new day opening gap, it's a time-based inefficiency. I'm pretty sure all firms, or at least to my knowledge, all future firms that I've referred to at least are 1 to 100. But in my opinion, the leverage doesn't really matter as much. And the reason I say that is because, you know, at the end of the day, you're focusing on your risk management based on your maximum drawdown. So whatever leverage you have doesn't mean you should use all of it. Just because I can trade 15 contracts on a $150,000 account doesn't mean I should trade all 15 contracts because my max drawdown is only 4,500, for example. What's the difference between Rhythmic and Trade of 8? I think they're just. Honestly, I'm not 100%. I'm not 100% sure what Rhythmic is. I think they're different brokers. I'm not 100% sure, but I know they're different platforms. Trade of 8, you can trade on TradingView directly. Rhythmic, I usually just use NinjaTrader for it, but I can't give you too much information because personally I don't know too much about just like the difference between the two. I just look at it as they're different trading platforms. And so I use Rhythmic for Apex because it allows me to just connect all my accounts on NinjaTrader. Same as the Trade of 8, you can do the same thing, but I just have, you know, Replicanto and Apex Copier on my, you know, NinjaTrader. So I just copy all my accounts together. And it makes it very easy if I use Rhythmic because everything's under one account. But I assume it's the same as if you went with Trade of 8, it's all under the same account. So I don't think there's much difference, to be honest, if you choose to trade with one or the other. Are there spreads in the prop firm? It depends. If you use Forex prop firms, then yes, because they use CFDs to trade. Whereas if you use futures firms, then there is no spreads. So which prop firm are giving 1 to 100 and have balance? I would say go with TopStep X. How much SMT divergence do you consider it as valid SMT? Sometimes I see divergence for only 1 to 2 points. Say ES higher than the old high by only 1 point, while NQ is still below old high. Is this SMT? Technically, that is SMT, but once again, that proximity, it matters to me, right? And generally, when you see an SMT forming, you want to see one asset trading into a PD array, whereas the other asset is trading into a high, and that's the kind of SMT that you typically want to follow. Are we able to now with Top Steps and Trade of 8? So I think the thing with Top Step and Trade of 8, if you use Trade of 8 with Top Step, then you can only trade either 5 micros or 5 minis, for example. But if you use Top Step X, then you can do 50 micros and 5 minis. So Trade of 8, you would be limited in terms of that. When do you choose to invalidate SMT? When all 3 highs are taken, right? In this case, if all 3 previous day highs are taken, then, you know, that's invalidation. So with that hourly close, once again, we're paying attention to new week opening gaps. We're showing signs of rejection lower, right? And we've created a new rejection block here. So I'd be keeping my eye on this rejection block as of right now. And so if we drop down to a lower time frame, we understand that we can no longer have a London high SMT, right? And because of that, right, YM takes it, NQ took London high, ES took London high. And so now I'm looking at this higher time frame rejection block that got created from the new week opening gap. I'm going to look for a lower time frame SMT within here. So let's see if we can get SMT with the previous 90-minute high. All right, so once again, proximity wise, I see that YM has already displaced way far. And so I would like to see either ES or NQ take out that previous 90-minute high. YM took London low conflicting SMTs. Once again, I'm only paying attention to the higher time frame SMT as of right now. How do you, could you show your NWOG and dog settings on your indicator? Sure. So these are the settings. I usually just have 50 of them on. You can reduce it to maybe 12 if you want, but I just have 50 just to be aware of them. And these are the settings. Can you differentiate between SMT and just slow price movement trying to catch up with the other index? So once again, SMT isn't necessarily about the velocity of price, it's just whether it's there or not. And so I'm looking for a lower time from SMT to confirm my higher time from SMT, because I'm always paying attention to my higher time frame SMT first. Good stuff, Victor. And I need to get a better chair. This one just, I bought this chair like maybe like a month or two ago. It's already creaking. There is no more daily loss limit with TopSep to my knowledge. They removed it. I must have just order just cancel without hitting stop or max loss limit. That is very interesting. Did it cancel when you were in drawdown, or did it cancel? When did it cancel? It just canceled by itself, or like without being in a position, or you were in a position? So you may ask me, does this look heavy? Yes, it looks heavy to me. I want to see some lower prices. However, once again, if it runs without me, I'm completely fine because my model's not there. If it gives me my model and I can participate in this move, then I'm all for it, you know? Trailing drawdown, I don't think so, Joe, because the thing is he has top step, right? So it hit your trailing drawdown, that's why. That's probably why. So if you're let's say you're $1,000 up in profit, then you gotta be careful of what your trailing drawdown is, I guess. Top step is a futures prop firm, yes. Oh, I see. I think I don't have too much experience with Forex, but I know FTMO is like pretty much the Forex prop firm industry leader, so you can look into FTMO. Hold your horses, everybody. Even if we take this high, I need you guys to pay attention to not only price, but time. This SMT is not valid until 10:30. Okay? Even if price drives above this. Then we'd just be trailing this high. Honestly, I don't know many options for Forex prop firms, but I'm sure there's people in the chat that know. So thank you guys for helping them out. Was your Alpha Capital Group? Oh yeah, someone said Alpha Capital Group. I think that one's been blowing up recently. I don't know if it's good or bad. So now I'm gonna ask you guys again. For those that felt eager earlier, are you glad you didn't press a button? Or did you press a button, right? And so now I want to ask you guys, are you guys enforcing good habits in your trading? May I know most of the time how many trades you have in a week? So within a week, maybe it really depends, right? It's just if my setup's there or not. But I'd say on average, maybe like 2 or 3 trades per week. Sorry. Hello, Gabe. I'm doing good. Did you trade yet, or are you in the short? I'm not in any trade because my model's not there. it's my model, it's higher time from SMT to lower time from SMT, and right now we just don't have that. Right, so we have a higher time frame key level, which is a daily level, the daily fair value gap. We have a 1 hour SMT with previous day high within a daily level, right? We've created that rejection block that we're paying attention to. And now I would like to see an SMT with a 90-minute high, because there's London high has already been taken by all three assets. So I'm looking for a 90-minute cycle high. To me, the reason I'm not using the 1 minute chart with a hourly SMT is because I'm not looking for something out of time frame alignment or out of time frame synchronization. I did not catch the short, Jason. What time frame do you execute on? It depends where the lower time frame SMT is occurring. So if we had that London high SMT hold, for example, then I'll execute on the 15-minute. If we have a 5-minute SMT, then I'll execute on the 5-minute. I will probably be heading off here pretty soon. If you guys have any additional questions, the reason being I have a appointment to go to at around 12. I have to leave at 12:45ish, and I have to get ready for it. So other than that, I think that analysis wise, I'll still sit here until like maybe 10:30 with you guys, but I want to see this high being purged. And if this high gets purged, then that would be the confirmation for me to look for short opportunities. Otherwise, I'm not super interested, despite the very clean market maker sell model on the 1 minute, for example, right? I need my higher time frame context and narrative to align with this idea before I'm allowed to even trade it. So until then, I'm only going to be looking at the higher time frames, right? Yeah, not much. I think I'm just gonna wait for this. When would you start to trade the lower time frame market maker model is when I have the higher time frame being confirmed by the lower time frame. So in this case, I'm waiting for a 5-minute SMT to confirm my 1 hour SMT, right? So that's what I'm looking for. And another thing, right? The first thing I said when we went into this stream is that it's a day right before CPI. You guys may want to be a little more cautious as we could see liquidity engineering. No, I want to see 2 SMTs, but you know, any additional SMTs than that is always great. Yeah, exactly, Michael. That playlist on the Discord. I just searched it up on Spotify. Here, let me take a look. Copy link. I'll just post it in this chat. It's pretty far down there. Okay, we're good. Yeah, so the reason why I'm looking at the 90-minute cycle instead of the daily cycle is because the daily cycle has been invalidated, right? You can't have an SMT with London high because all of them have been taken. And that's why I'm using the 90-minute cycle now. How's my new monitor? It's been pretty good actually. Um, it's been frustrating at times because it's such a I'd say like maybe a technological advancement, so there are complications that come with it. But once you get past that, I think it's pretty good. It's not bad at all. I very much enjoy the one massive monitor. Sometimes I do miss my old setup of 3 monitors. I actually have that right next to me. It's 3 monitors, but I don't feel like plugging in my computer and stuff. And I already got this monitor, so I might as well use this. But yeah, sometimes I do miss the 3 monitor setup. I think I'll have 2 different setups in the future, but for my second setup, I'm planning to have my friend come over and trade with me. That'd be pretty sick. Yeah, exactly. Mr. Tasty. What monitor do I have now? It's the Odyssey Neo G9 57-inch monitor. Yeah, it's quite the beast. It broke my table actually, because I got a monitor arm and I thought the back part of my desk was metal, but it was not. It was wood being held up by metal support beams, and the beams got ripped out, like the screws got ripped through the wood because of the weight, due to the weight of the monitor. So now I've clamped it on 2 portions of my desk so it can, yeah, I gotta get those metal plates. But I think the way I have it now is pretty good because it's distributed between 2 wooden planks. Would you consider look at Asia high low being taken when in New York? Not, it's not really. Most of the time, not really. I would just focus on the quarter prior to the current quarter, so the immediate previous quarter. Of course, I'm not telling you guys that the previous quarters that are not immediate to the current quarter are, unimportant, but when you're starting off, I would suggest just looking at the one that is right before the current quarter. But yeah, I'm probably going to head off here very soon. I mean, it's 10:30. I still have to hit the gym. I have to leave by 12:45. I think I should have enough time. Yep, exactly. So, are there any more additional questions? So, I probably will end the stream here, pretty much. Type 1 if you're satisfied with the stream, and type 2 if you guys have any additional questions you want me to wait for you guys to type out. And I'll give you guys maybe until 10:35. And once again, before you head out, I just want to put a reminder, make sure you journal. Even if you didn't take a trade, make sure you journal. Can you show like a model you would take? That's I have lectures about that on my YouTube channel, so you can feel free to look over those. On that note, thank you all for attending the live and, you know, spending the morning with me. See you guys next week. I believe next week, same time. Let me just make sure. Yeah, so next week's gonna be at 8:15. So next week's 8:15 a.m. on YouTube, because we have a news event at 8:30 most likely. That's why I put at 8:15. So I'll see you guys next week. And as always, have a great day. Oh, wait, there's a question. How and when do you anticipate a fair value up being breakaway gap and not an inefficiency to be traded into? When you have an RDRB or other PD arrays holding price above or below a fair value gap, and that's when it becomes a breakaway gap. But yeah, once again, on that note, take care everybody, and thank you for attending the live.